our stock of the day is Goodman Group. That is the integrated commercial and industrial property group. It owns, develops, manages real estate. It has come up with an update. It's expecting to pay a 30-cent a share dividend at the end of this financial year, confirming operating earnings are up, growing 23% per share, despite concerns over COVID restrictions impacting supply chains and inflating costs. The company is expected to have more than $70 billion in works in progress by the end of June. Now, shares popping into the green this morning after taking a hit last week, currently up about 1.9% at this point. In fact, we've got a viewer question about this. Steve wanted to know, saying Goldman Sachs has a target of $25, and at the time of writing, well, in fact, at the moment, it is $20. With their rise in rental returns and cash flow, and 12-ish billion invested in development works in progress from the half-year results. Do the experts see this as a long-term play in the REIT sector? David, what are your thoughts on Goodman?
Look, it is a quality company. It's certainly got quality assets and 68 billion funds under management, plus their update this morning is very positive, the 23% earnings per share growth. So it ticks a lot of boxes. I mean, the yield is not great on this. I'd like to see them pay out more. If you look at the yield right now, from what I can see, it's 1.5% unfranked. They've got a very lowly geared balance sheet of only about 7%. But, you know, they're a solid company, 99% occupancy. They've got 13.4 billion, as they reported this morning, in development in the pipeline. So it ticks a lot of boxes. The chart doesn't look great. You know, I'm a chartist as well as I follow the fundamentals, but the chart you can see there looks pretty horrible. It fell off a cliff. So look, I could see a little bit of a technical bounce here, but there's no rush for me. I would not be rushing in to buy Goodman, but if you're taking a longer term perspective, I can't see any problems to accumulate down here. But for me, it's not a buy, it's a hold if you've got it, and particularly given that update this morning. But I'd like to, like I said, I'd like to see them pay out more of a dividend, increase that yield to double, would be more than double, because especially with inflation, they've got some hedge in place. At the interest rate's 84% hedged, is what I read. So that's pretty good if we have higher, like we're seeing now, higher rates. But yeah, look, technically, it's not a buy for me. But if you've
is there a particular price you'd have in mind if, as a buyer, or is it more the sort of the fundamentals of the company at this point?
No, the fundamentals are solid. It's more about the technical aspect. I look for a change of sentiment and trend.
Yep.
And that's certainly not showing on the chart right now. So what I'm saying is, for me, there's no rush to go in and buy this stock. And plus, you know, it's what choices do you have out there? You know, it's like that I can find that are better in terms of yield and growth as well. So, but if you're in the REIT sector, you know, if you really, that's a sector you like, this is a solid company. They've got overseas earnings with the Aussie dollar being low, so that's beneficial for Goodman. But yeah.
All right, so it's a hold from you. Howard, your thoughts?
Yeah, I would regard this as by far the best company in its sector listed on the ASX. It's got very high return on equity, it's got low debt, its earnings are growing, and it certainly has, over the last decade or so, been the best managed company in its field. So if you want to own a REIT or a company in the property management and development space like they are, this is definitely the company to be in. As David says, dividend yields are low, but, you know, they're using that money very well indeed in terms of their return on equity. Most REITs have a return on equity less than 10%. Theirs has not been below 10% for several years, and it's generally in the mid-teens. I was just looking across my other screen there. So if you want to own a REIT, this is it. But we must remember two things. On the one hand, inflation is going to mean that rents they receive will be going up, which is great, terrific for earnings per share. But inflation going up means interest rates will go up, which means the value of the properties they own will be going down. Now, if they don't want to sell any of the properties, that doesn't really matter. But if they are looking to recycle some of that money, they're going to get lower prices for properties they sell than they would have got if interest rates were lower. So, I think it looks really terrific. Love the fact that David thinks the chart looks terrible from a technical point of view, because that means you could be buying it cheaper. But I don't think it's all that cheap at the moment, but it's certainly getting pretty close to being in bargain stages. So I would say, if you can get it on a couple of days when there's negative sentiment, and you get it in perhaps starting with an 18 instead of a 19, you'd probably be very happy indeed.
All right, so not a buy quite yet though, but if it goes lower, it is for you.
Yeah, definitely.
Yep. All right, great.